Writing a business plan is an important part of the ideation process for every startup. Demographics, market studies, competitive analyses, financial predictions, new goods and services, and much more are all aided by business planning. When you're attempting to establish a business or pitch to investors for money, each of these pieces of information is crucial. Now, what exactly is the purpose of a business plan? If you're just getting your business off the ground, you might be thinking if it's really worth your time to prepare a business plan. It is, and we are here to tell you why. A business plan is crucial for a number of reasons, but perhaps the most significant one is that it helps you set yourself up for success from the outset. Before we get into how to develop a business plan, here are 4 reasons why you should create a business plan to get your company off to a good start. Reason 1. Setting realistic goals and standards. Creating a business plan will assist you in defining your growth strategies and setting realistic targets when you start your company. You'll be able to become more realistic about your schedule for completing everything, as well as your financial expectations, if you set out each of the actions you need to follow to build a successful business. Reason 2. Expanding your business more quickly. Having a business plan allows you to be more organized and strategic when you start off, boosting the overall effectiveness of your company. According to one study, firms that have a strategy expand 30% quicker than those that don't. Isn't that reason enough to begin your company endeavor with a well-thought-out strategy? We believe so as well, but there are 2 other good reasons. Reason 3. Reducing risk. It's unfamiliar ground when it comes to starting a new business. Starting with a blueprint for your trip, on the other hand, makes it simpler to recognize success and reduces the dangers that come with companies. By recording the most crucial aspects of your company strategy, you can reduce risk and increase profits. Reason 4. Guaranteeing funding. If you want to pitch to investors for money for your new company, they will usually want to see a complete business plan before determining whether or not to invest. Now we are going to walk you through some of the most essential parts of your business plan, as well as how to develop your own in just 8 simple stages. Step 1. Create an executive summary. The executive summary provides a quick review of your complete business plan, allowing everyone who reads it to get a sense of what they'll discover about your business concept. However, keep in mind that some of the people who will read the business plan will either not want to or will not have time to do so. As a result, the executive summary must include all of the most crucial components of the strategy. The following should be included in the executive summary: the main goals, information about competitors, market research, product services, proposition of value, a summary of your financial strategy, and how you are going to start your business. One thing to keep in mind is that you should write your executive summary once you've finished writing the remainder of your business plan so you can correctly summarize what you've done so far. Simply leave a page blank for your executive summary at this stage so you can return to it at the end of your business plan. Step 2. Compose a brief description of the business. The next stage is to provide a detailed description of the company and its main services. The goal statement and objectives, as well as a brief history or summary of the firm, should all be included in this area of the business plan. You may also include a brief legal description of your company's creation in this area. This part includes a mission statement, objectives, and review. The mission statement. Spending too much time attempting to write this is a waste of time. Your mission statement is a concise explanation of why you created this company. What exactly are you attempting to accomplish? This can be as short as a single quotation or as lengthy as a paragraph. Objectives. Here we need to think about the goals for the first 90 days or 1 year of the company. What type of market impact does the business aim to have? History or preview. Here, let potential investors know about your company's past if you're not establishing a new firm, or if you've previously worked on another incarnation of it. If not, simply give a general overview of your company, including what it does and what it plans to do. Step 3. Perform a market analysis. The third stage is to do a market study in order to determine how your company will fit into its target market. The purpose of this section is to simply describe your results. The majority of your time should be spent conducting research. Things to consider in your market analysis include the size of the market and whether it has increased or shrunk in recent years, demographics and behavior of your target group, your method for gaining a competitive edge or differentiating yourself, and your product or service's average price. Step 4. Analyze your competitors. The next thing to do is a competitive analysis. While it may have been mentioned briefly during the market study, now is the time to dig further to understand what rivals are up to and how they are attracting clients. Begin by compiling a list of all your current rivals, or, at the absolute least, your closest competitors, those that offer extremely comparable products or services to you, or are located in a similar area. Concentrate on their strengths and what they excel at so you may mimic their best attributes in your own unique way. Then consider their flaws and how your company may improve. Take notice of their current marketing plan, as well as the channels where you can find them, whether it's on social media, on the radio, or on television. You won't always be able to locate all of their marketing outlets, but go online and on their website to see what you can find. Step 5. Make a list of your products or services. Make a concise list of and explanations for each of your first product or service offers, but avoid using industry jargon or buzzwords. This should be presented in simple terms so that everybody reading it understands exactly what your company will do. Step 6. Summarize your financial plan. The next stage is to focus on your new business's financial data. What will your operating costs be? How will you make money with your company? What do you expect to spend and make in the first few months to a year? At least 5 important components should be included in your financial plan. Number 1. Sales forecast. This is a financial estimate of how much money your company expects to make in the next year. Break this down into your company's many goods, services, and perspectives. Number 2. Balance sheet. This component is basically a financial statement for your organization. It shows the company's overall financial health by including existing assets, liabilities, and equity. Number 3. Income statement. This statement, also known as a profit and loss statement, shows your predicted costs and income, as well as whether or not your company will be successful. Number 4. Operating budget. This is a precise breakdown of your company's revenue and costs. This should demonstrate that your company earns more money than it spends. Number 5. Cash flow statement. This keeps track of how much cash your company has on hand at any given time, regardless of whether consumers or clients have paid their invoices or still have 3 to 60 days to do so. Because there is so much that goes into a new business's financial strategy, it will take some time to develop. This portion of your business plan is very important since it informs potential co-founders or investors about the viability of your concept. Step 7. Establish a marketing strategy. The next stage is to develop a strong marketing strategy so that you can effectively promote your company. You've already done research on your competition and target market as part of your company plan, both of which are critical components of a successful marketing strategy. You must understand who you are marketing to, and you must do so more effectively than your competitors. Begin by looking at the mediums that your rival are using and ensure that you have a thorough grasp of each channel's demographics. You don't want to waste time on a marketing channel that isn't used by your target demographic. Then make a list of all of your potential marketing channels, such as social media, for example, Facebook, Instagram, or Pinterest, email newsletters, digital ads, and video. This list may vary significantly depending on the sort of business you're establishing, and that's fine. There is no such thing as a one-size-fits-all marketing plan, so you must identify the one that attracts the most potential clients. Step 8. Create your organizational chart. The last portion will focus on the members of your leadership and management team. Demonstrating that you have a strong team from the start might help potential investors feel more comfortable about investing in your business. You may simply create an organizational chart with the founder CEO at the top and each of your team leaders beneath them, along with the department they oversee. While the business plan may be used to attract investors, partners, and suppliers, keep in mind that the purpose of the business plan is to persuade you that your idea is sound. Because at the end of the day, it's your time, money, and effort on the line. What else would you like us to talk about in our upcoming videos? Let us know in the comments below. And make sure to subscribe and turn on notifications so you don't miss out on any of our videos.